SBC Media.
Brazil, a global economic powerhouse, deeply passionate about sports, and now home to one of the hottest markets in gaming. And we're giving it the full SBC treatment. Join industry leaders, market experts, and all the major players in the country for 3 days of content, exhibition, and epic networking at the first ever SBC Summit Rio.
SBC Leaders connects the gambling industry's top-tier operators and associations to share the best ideas, collaborate on solving the biggest issues, and push innovation throughout the betting and gaming industry. If you're an operator and want to join the discussion, visit sbcleaders.com for more information.
Prior to posting its Q3 trading update, Entain had warned investors of aggravating factors impacting period trading and lowering the firm's full-year earnings guidance. Year comparatives see the FTSE giant maintain revenue growth, primarily due to the continued expansion of the BetMGM joint venture. Yet results cannot hide the lacklustre trading of its European brands, reporting pro forma revenue declines across online and retail segments. Acting on the front foot, Entain's leadership has triggered a new corporate strategy, streamlining operations to improve earnings and shareholder value, as company investors are told that Entain will soften its M&A strategy. I'm Martyn Elliott, and on today's episode of iGaming Daily, sponsored by SBC Summit Rio, I'm joined by Ted Menmuir, SBC's Content Director, and Charlie Horner, Senior Journalist working on SBC Americas, and also editor of Canadian Gaming Business Magazine. Ted, how are you today?
Very well. Ready to riff with Charlie for the first time. My new dancing partner, guys. Yippee.
Yeah, and Charlie, what about you? This is 130-something episodes. It's the first time I've been on with you. I was beginning to think you weren't talking to me.
Yeah, I thought we were all avoiding each other, but yeah, it's great to be on with you too. And yeah, let's dig into Entain.
Yeah, sure. So it's an interesting topic, this one, because if you read the reporting of the results in the Times, you might just think it was Manchester City winning bad, USA good. And that was the whole story. But there's a lot more to it to that, isn't there, Ted? So perhaps you could give us a sort of start by giving us an overview of the results and your general feeling on them.
I'm going to begin with the general feeling. And prior to the Q3 announcement, Entain had issued a pre-close statement saying that they've softened financial targets for the year, and also that Q3, there's a number of aggregating factors into Q3 that will impact their earnings results. And what we saw is kind of a story of what we already knew. So Entain's growth has been led by US gains versus substantial, significant headwinds in Europe, especially Germany and the UK. I think if you're an investor, the underlying concern is the impact on online growth as a whole, and the fact that you're seeing kind of pro forma declines year on year across its online and retail segment. And what we've seen is Entain leadership call for a streamlining of its business, which many people had predicted at the start of the year. You know, Entain is bloated to a certain extent. It does carry a brand portfolio of plus 35 brands, and also kind of this deeper underlying questions of what is Entain? I mean, is it just a company that can just acquire and there's no need for integration? And also, how has it integrated its assets? So it's a company that grows year on year, but where is it creating its synergies, and what will the future enterprise look in 2 years' time, and how's that reflective of the market and what the market's going through?
Sure. And what was your sort of initial reaction, Charlie? So I guess you're looking at it more from a US standpoint in particular?
Yeah, absolutely. So, I mean, I'm going to mirror a little bit of what Ted said, really, but I think what Entain's leadership is thinking is thank the Lord for BetMGM, because it really is, digging them out of a hole, really. So BetMGM posted NGR of 458 million. That's a 15% year-on-year increase. Obviously, Ted's outlined that there was a negative 5% pro forma online revenue posted. So, BetMGM really is sort of digging it out of a hole, like I said. And yeah, I guess we are thinking, what is Entain? Investors, I think, can be split into two groups. I think there's a lot of investors who are there for that BetMGM growth, trying to ride that opportunity. And then you've got investors who have probably been there pre-BetMGM, who are looking at the European operations. And I think a big question really is, what does the future look like for that BetMGM joint venture?
Sure. And Ted, just back to you a little bit. Obviously, at the start of the year, Entain had set out some fairly clear objectives for 2023, and there were some quite high expectations on around performance. Well, we've just had the Q3 results, and the leadership are now saying, we need to streamline things and so on. So is there an element that perhaps Entain's been a little bit found out? It didn't have its strategy right at the start of the year?
I think you can argue that. And actually, look, it's very easy to kind of play Monday morning quarterback. And what I mean by this is, at the start of the year, yes, the clear narrative for Entain was get the US growth, show that your online competencies, and the big story around Entain would have been what happens to the BetMGM joint venture. Will MGM Resorts put forward a deal? Now, I think everything has kind of been delayed on that front. So I think the analysis now of Entain is, what type of company has it grown into? What assets has it acquired? And do these assets actually benefit Entain's kind of long-term strategy? Again, so many questions point towards kind of how has it integrated new assets? What does its portfolio look like? Also, in Streamline, I think they're going to have to focus particularly on where can it kind of shed weight? What brands will it cut out of its portfolio? And then the other thing here is also there's going to be kind of questions raised about leadership, because you did have to look at kind of, these big kind of headwinds in Germany and in the UK and ask, did they really kind of mitigate for any of these, right? And how much for at the start of the year?
Okay, so there was another element, actually, I just want to bring into this, which again is a sort of a legacy issue for them. They mentioned what they're calling the Sunrise strategy, and it's a move out of the unregulated markets that they've been in. So I don't know, Charlie, what you think about that, and how you think that might continue to affect the business. Have we already seen the biggest effects of that in these results over the first 3 months of the year, or is there more problems to come from that?
Well, again, I'm going to come at it from a North American perspective, and I think one of the things that leadership was outlining in the call was that, US regulators are quite strict when it comes to these kind of things. When it comes to the licensing process, they want to know about your overseas activities, what your operations look like. In other jurisdictions, are you flouting regulations? Are you in unregulated markets? And I think that leadership probably has one eye on that, and maybe some big states that might launch in the next 2 to 3 years that they don't want to miss out on. And I think that's one of the reasons why this Sunrise strategy is such a big thing. I don't know if, Ted, you have any thoughts that you want to chime in with there.
No, I agree with a lot of what you said in terms of from the US perspective. The other thing here is, I think, look, Entain has had quite a unique journey as a gambling PLC. It's always been driven on an M&A front, and I think, as we've seen, especially with their issues in Turkey related to kind of ex-GVC Holdings properties, their legacy issues are now coming into play. And I think they have to kind of address this stuff head front. And they've got to be very clear about, we're now a regulated company. They have to kind of abide by the market rules, run their licenses as clean as possible. And as you see, that does have kind of bottom line impacts. They said that Barry Gibson addressing investors that said that the total cost of doing that, of just getting out of unregulated or grey markets, cost them about £100 million a year. And also just the costs are compounding because, yes, they're missing that £100 million a year. But on top of that, at the start of the year, they reserved $30 million for UK headwinds. So I think what Entain tells you is just how difficult it is now to run a global online gambling PLC. And it really is just coming down to, you need everything to kind of like just scrape kind of any EBITDA at the end of the quarter.
Sure. And I suppose related a bit to what you were talking about, Charlie, there's a lot of optimism and they're talking up a little bit about the North American expansion and so on. Do you think maybe they need to be a little bit cautious about the prospects in the US?
I think, yeah, I mean, to err on the side of caution is probably a safe option. But having looked at the results and the fact that BetMGM is outperforming the rest of its markets, then you can understand why they're going heavy on this 20 to 25% market share target within 3 years. Now, in the US, they're currently holding around 18% of the market for sports betting and online casino. They want to increase that to around 25%. I think where the caution needs to come in is that you've got these significant challenger brands entering the market in obviously Fanatics and ESPN Bet on the sports betting side of things. And, you know, all three of these companies are aiming for around the same market share targets. And you've already got the top two aren't going anywhere. FanDuel and DraftKings, they're cemented as the top two. All these companies' targets of 25%, that doesn't equal 100. So someone's got to fail here.
And whose market share do you think they're going to take out of that?
It's difficult because they claim that they're the leader in online casino. I think they have 26%, and I think they are often regarded as having the top product in online casino in the US. But they're looking to make those gains on the sports betting side of things. I don't know whether they're trying to take share away from FanDuel and DraftKings, or whether they're trying to look down and take some of that share that some of the smaller operators have got. Obviously, one major strategic purchase that they've made this year is trying to improve the pricing strategy with the Angstrom Sports acquisition. You know, they say that it's a very sophisticated piece of technology that can improve that pricing model. Whether it's going to, improve significantly the user experience to entice and retain users, I'm not too sure. So it's difficult to see where they take that share in sports betting.
Can I just add? I mean, look, with Entain, and what's really striking is that I think there's kind of a bipolar outlook on Entain. So on the one hand, you've got US and South American markets as there to be exploited, underpenetrated, let's go for them. And on the other hand, you've got the kind of stagnant reality of what's happening in European markets. What I'm worried about Entain, especially from an investor perspective, is all their growth just going to come from one narrative of it's BetMGM, and that's the story we tell everyone, and that's what they have to bank on? Or do you guys think that they have something else, that they have something under their sleeves that's going to come out?
I think they're going to bank on. I think they're going to look to bank on Brazil. I think when that market regulates, I think everyone's expecting that market to be huge, and I think they'll probably look towards those new and emerging markets to spearhead that growth, because as we've seen, the strategy in those mature European markets, there leaves there's room for improvement in those areas.
Yeah, and do you think you'll know more about this than me, Ted, but there's an opportunity for them with some smaller operators are going to be really badly affected by regulatory change in the UK and Germany, the same as Entain will, but Entain is big enough to cope with some of that. So do you think there's an opportunity for them to bit of market share there?
I think they can, but it's that will take that would be an 18, 24-month outlook. And I think the problem with Entain, it's that with their aggressive strategy, with all their M&A's bolt-ons, it really is, you're looking at them now. Who are they? What can they can they turn into the next 6 months? I don't really think that their investor profiles there looking for a 3-year strategy. So for them, it's like, will we get this MGM deal at any time soon, and at what value? The other thing is that if they're saying they're going to slow down on their M&A strategy, it's what replaces that. Because then I think people are going to start to probe kind of their internal brands and say, hang on, guys, how did it get to this? And what can you strip out? And I think for every solution Entain puts forward, it seems like there's 3 or 4 questions coming back that just shows that there's kind of fundamental flaws in the way the company has operated, right? And I think if you're an investor, you are kind of well aware of what's happening.
So I would just add there on the BetMGM, when is that deal going to happen? I'll just provide what the board said the other day. Barry Gibson said that he met up with MGM, with his MGM counterpart Paul Salem, and they agreed that they will continue to invest in BetMGM next year, which is interesting because in previous communications they'd said that they would bring that investment to a close, that BetMGM would be a self-sustaining business going into 2024. They didn't reveal numbers of how much they would be investing next year, but they did say that more Entain cash will be going into BetMGM. And then on any potential deal, they said that that is just not on the table at the moment, and obviously investors will continue to wait.
So with that in mind, they're going to be investing more in the US. We know they're investing a lot in things like player protection and updating systems to deal with regulatory change in Europe. What is going to go in this streamlining they're talking about, which is a nice posh business word for cutting costs, isn't it, really, streamlining? Where do you see that? Where do you see those cuts coming, Ted?
I think there's going to be a revision of their brand portfolio. It's 35 brands. We've already actually started to kind of see, 2 months ago, they pulled the plug on Unicorn, their esports investors, B2C side. So I think, yes, the revision of their brand portfolio. Also, I think they're going to look at which are the kind of easiest integrations, or the integrations that run towards kind of co-synergies. I actually think that on kind of a wider perspective for Europe, I think that there's going to be a revision of like key markets too. So Germany, for example, is a huge issue for every operator now. And I think if it keeps on going like this for the next 6 months, I just don't see how Entain can keep on kind of piling in costs to maintain a German market that really, really just won't contribute to bottom line. And I think if it retreats from Germany, it will just go back to focusing. It will just help it refocus back on the UK and on UK compliance costs. And that's another kind of measure of how effective they will be, right? So for the next kind of 12 months, I think the analyst focus is on your compliance costs in the UK, but looking to see how you come out of it by 2025. So I think that would be a key measure of performance.
Okay. And what, from a sort of North American perspective then, Charlie, any room for streamlining there, or is it all just chucking cash at the US and Ontario? And also, I guess there's a little bit in their strategy where they're just hoping more states regulate iGaming, isn't there?
Oh, absolutely. I think a lot of operators are thinking about the iGaming opportunity and whether that's going to happen in the next couple of years. As whether they're going to consolidate in the US, I'm not entirely sure, because they have doubled down and tripled down on that US opportunity in the Q3 earnings call. because they want that 20 to 25% market share. And I think they've really set a precedent of what they're trying to achieve there. Maybe if, some of the smaller states legalise and launch, will they go in? They haven't gone into Maine, which launched last week. But that's because of the structure of the market in Maine, where you have to give up a lot of your revenue. I think you only get about 30% of revenue in Maine. But I guess that could indicate that the less intent on the smaller markets, and they're really waiting for your Californias and your Texases and that kind of thing. But no, to answer your question more generally, I think they're really doubling down on investing in the US and making a real success of it.
Okay, and then perhaps just to finish off, Ted, if we could be a little bit parochial, as we're all sitting here in the UK at the moment, in various places here, with we think sort of regulatory change on its way in the UK, although perhaps the publication of the white paper posed more questions than it gave us answers. How do you see the future sort of playing out for Entain in its home market?
Oh, tough question. I think it will really tell kind of the underlying commitment of Entain to the UK market. Now, in what it has Ladbrokes, it has Coral, it has these heritage brands, and Ladbrokes and Coral were kind of the big buyouts that got Entain to where they are now. Look, if you talk to kind of any CEO, the reality kind of kicks in about the UK market. It's that you have to have kind of a long-term plan, a long-term outlook to kind of get through the headwinds, get through the regulatory review, see how the market is pans out, or see how the terms of play have changed for the operators. Now, I think that Entain, looking at how much they're spending on compliance costs, probably feel that by 2024, by the end of 2024, 2025, there'll be a lot of market exits, and hopefully they're there to kind of recapitalize on the mid-tier brands leaving the market, and then they can kind of take market share. But that market share comes with much higher compliance costs, and the expenditure there. I mean, I don't necessarily think it's going to be like reflective of earnings, right? So I think it's going to be growth on market share, but not necessarily growth on the beta performance. Again, that growth, and I think Entain and the majority of PLCs know, that growth now comes from taking podium places in underpenetrated markets, be it in North America or South America. So it's coming back to this kind of old scenario of you got stagnant European, you got peak European growth, peak European market conditions that you have to kind of maintain, and then go all at it in new markets. It's a very, very high risk strategy.
Yeah, well, thank you for that, Ted, and thank you for joining us, Charlie, and giving us the US perspective on all things Entain. And thank you for listening, and we'll be back tomorrow with another episode of iGaming Daily.